Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, May the 19th, 2010. Well, a continuation of the trend to the downside that began yesterday. We have another candle with a lower high and a lower low. This time the size of the red body has extended quite substantially, and that's telling us that the sellers have made some very substantial net bearish progress on the day between the open and the close. So quite a bearish day today. The bears have been able to maintain control of this market, where they've closed the market down towards the low, and they've shown some commitment to taking this market lower. Now there is a small shadow on the bottom of this candle, and that represents buying coming in, and that coincides with the area where the Kijun-sen is at 1187, and the market has traded down to exactly that level, and the buyers have come in. And we often expect that the Kijun-sen or the Tenkan-sen will act as an area of potential support if the trend is to the upside and the market's retracing back to it, especially when we have a flat Kijun-sen. And the Kijun-sen here isn't perfectly flat, but it really doesn't have much of an angle on it. So this market has been attracted back towards there, and it happens quite often when the Kijun-sen basically turns flat. Now the market is still trading up above the cloud or the Kumo, and that means that the market has an overall positive bias. The market was looking a little bit overextended when it was trading up around here, and it's little wonder that the market has traded back towards these indicators and towards the cloud. As I've said quite often, markets behave like rubber bands. They get overextended and then they bounce back, and that's exactly what's happening here. It doesn't mean that the trend is over. The trend remains up in the second time frame, where we have a series of higher peaks and higher troughs. All we're doing at the moment is making another trough. There is potential for that trough to be lower because we are now trading at the previous trough, which, by the way, is also offering a certain amount of support to this market. And but even if that trough is taken out, we don't have an end to the uptrend. We would need a lower peak and a lower trough. Now the market is still trading up above the Kijun-sen, which means in the medium-term time frame it has an overall, it has a positive bias. But it's now trading down below the Tenkan-sen, which means that it's short-term bearish. For the current trading, we do need to watch the low of the current candle. It becomes very important for this market because it would potentially mean a breakout down below the Kijun-sen, which is a bearish indication with Ichimoku chart. And considering that there is a fair distance down to the cloud or the Kumo, one could potentially trade that breakout for the market to find support down around the Kumo, which is a fair way away. There are some areas of potential support on the way down, and there's a swing low down here around the 1156, 1160 region, and then certainly down around the 1128 or 1125 region up to 1140 offers some strong support, and we can see the shadows on the bottom of these candles. The Kumo, or the cloud, will also come into play around this 1136 region at the moment. So to the upside, we have potentially strong resistance at 1227. It was a previous area of support. It's shown to be resistance on the previous two occasions, where we can see the shadows on the top. If the market is going to change trend, then the market would need to have a solid break up above there. But we also have these shadows on the top of these candles up to around 1250, so there is some decent resistance all the way up to there. So we do need to keep an eye on the high of the current candle for that potential. Not too likely, I think. Probably more likely that the trend will continue down, or the market will start consolidating around this area. So the low of the current candle is very important over the next few trading days.